So let's sort of start it off. So Alan, I think the way that we kind of have run it is that if you could do a little introduction about yourself and, you know, who you are. I mean, obviously, I'm sure many people know who you are, but maybe not everybody. So if you maybe do a little bit of background and introduction about yourself, and then let's maybe start with some of the questions that people have kind of already submitted so that we can get going. And then as we progress, I'm sure people may have some questions as we go along, and I think we'll probably go absolutely no further than take up an hour of your time, but let's see how it goes. So Alan, the floor's yours. Tell everyone who you are.
Okay, well, thank you. And it's really self-indulgent, isn't it, this time of the evening when a speaker introduces himself. Okay, so as you can see, I'm an extremely old chartered accountant. I'm a partner in a firm called UNW. Here's sort of a bit of a billboard here. We're specialist dental accountants. We're based in Newcastle, the northeast of England. But those of you who might be considering changing your accountant, don't let that put you off, because we have something like 500 clients up and down the country, or the countries, ranging from, we do some work for a couple of the large corporates, through the whole spectrum, looking after associates. UNW is a single office firm. We're about 110 people. Most of our people are ex-PwC. And when I joined, I wondered, this was back in 2000 and when was it? About 2008, you know, what relevance of all of these sort of talented folk got to the dental community, but it was perfect timing. Shortly after 2006, when incorporations were allowed, and quite a lot of things have happened right across the spectrum of financial advice that need good high-level professionals. I'll give you an example. One of the most important advisors that I've had over the last few years has been our VAT partner, and I'm sitting in sort of a good gathering of the dental community. Some of you might be registered for VAT, but where you have these hybrid structures, you might have NHS contracts that are run through a sole trade or under a subcontract with a private limited company. All of this sort of thing, it's very easy to sort of wander into VAT territory unknowingly. And so having an excellent VAT partner, that's sort of I suppose a good example of how the unexpected can be very, very useful to an advisor like me. So that's a bit about me. My sort of personal involvement in the dental world is I have a son, Nigel, who's got a couple of practices in the northeast. He's in his mid-30s and is increasingly carrying out lots of implant work. He's a fledgling. He wouldn't say that. He's an experienced implantologist who's trying to build up that side of his work. And my daughter-in-law, his wife, works in the community. And I think this says a lot about life, I suppose, and about academia, that Babs was always the prize winner at dental school, popped out into the real world, but doesn't like chasing UDAs and works in the community. Nigel, who apparently sort of scraped through by the skin of his teeth every year, is sort of more entrepreneurial and running a couple of practices and I think enjoying life. So there we are. That's my personal connection.
Fantastic. So brilliant. That's, I think, a great introduction. I think let's sort of start with maybe the first obvious question. Why would dentists want to have a specialist dental accountant as opposed to just going to any accountant? What you, I mean, I think you answered a little bit in that, but you know, what would you say would be the reason why people want to see a specialist?
Yeah. Well, I think for those of you who have NHS contracts, I would go so far as to say you'd be absolutely bloody mad not to have a specialist dental accountant. It's as strong as that. And I do have sort of quite controversial and extreme views from time to time. But you know, it's very easy with I've seen situations where people have been operating illegally. In fact, usually a couple of times a year, I'll get a potential client who will say to me, "I'm in partnership," and you know, we get chatting and say, "Oh, that's interesting. So your partner? Oh, it's my spouse." So your spouse, dentist, GDC registered? No, just my accountant told me that was a good way to save tax. So there we are, operating illegally. So there's a classic own goal, a pretty extreme one. But I've seen situations with people who've breached in NHS contracts inadvertently, etc., etc. For those of you who are purely private, you might be saying, well, okay, what relevance has this got for me? I suppose the main claim to fame, this wouldn't be all dental accountants, but certainly I'm on the technical committee of NASDAL. Anybody that's got a NASDAL accountant, their accountant has got access to the only proper benchmarking set of data. So annually, the NASDAL accountants put a whole lot of profit and loss account information from their clients, 3 categories: NHS, private and mixed, all on an anonymous basis. I did once have a client who was performing so spectacularly well, he forbade me from putting his information into the mix, just in case the powers that he was an NHS practice, he didn't want anybody to know that he was making, what was the figure, 300 grand a year, you know. Anyway, I won't go there. But as a private practitioner, wouldn't it be nice to have your accountant, rather than just sort of saying, here's your accounts, this is your tax bill, to be going through your accounts with you, carrying out a benchmarking exercise. And it's just a way for you to be, if you're interested, I know some of you probably are working with people like Andy McDougall of Spot On, Chris Barrow, that get into profit improvement in a much more detailed way. But for those of you who aren't, wouldn't it be nice to have within your fixed fee package, so effectively free of charge, a comparison of how your individual results compare to averages? It's just a way of thinking, well, how can I improve? So that's it really. But I suppose actually the most important thing, I think, with any professional relationship is somebody on the same wavelength as you. The usual criticism that I hear is of accountants that just are not on the wavelength of their dentist clients. In fact, probably not on anybody's wavelength. It's a common thing with accountants and lawyers. So the chemistry, the communication, understanding what it's all about is paramount. But wouldn't it be nice to have somebody with 30 years of experience? Actually, I've got more than that. I hesitate to say 40 years of dental experience. There we are. So yeah, it's a combination of those things.
Absolutely. I think, as I will just say, full disclosure, I am a client of Alan's, and having that benchmarking is a really useful tool. So, really, really excellent. So I'm just going to ask a couple more questions, and there's quite a lot of people on the call, and then I might just sort of say, if people either wish to ask any questions, please put them in the chat, or just kind of do a little unmute yourself at an appropriate time, and we can ask your question, because this is what Alan is here for. But I would say, let's sort of go there because of COVID and coronavirus. What are you seeing in the dental market? Is this a buyer's or seller's market right now?
Okay, well, with regard to practice purchases and sales, it's turned out in a way that I never imagined for one moment when COVID first started. I remember sitting in a virtual meeting of accountants and lawyers, where an accountant was seriously saying he thought practice values had plummeted to be 10% of their pre-COVID levels, and there was sort of enormous doom and gloom. In fact, that is not the case at all. I was involved with a virtual NASDAL meeting this afternoon, and this was one of the points that we were discussing. There's been negligible difference in goodwill values. So that's good for practice owners. Arguably not so good for those that we have some associates, I understand, who are on this tonight. And I know there's been much more enthusiasm, certainly during the first lockdown, when practices were closed down, when a number of associates, I'm sad to say this, so stand back principals, but there were some principals who treated their associates appallingly, who totally disregarded the NHS rules on payment at the previous level, etc., etc. I'll get back off my hobby horse here, but associates that wanted to buy practices, and the sales agents that I know were telling me that huge interest from associates. So the sad thing, associates, is that practice values have not fallen off a cliff. And to make matters worse, although lenders appear in webinars saying, whichever lender it is, dental lender, we continue to have enormous enthusiasm for dental lending. Yes, they do, but almost without exception. Probably, I think Lloyd's is probably an exception to this, but they have sort of ratcheted squeeze the lending parameters. So what do I mean by that? The deposit levels that are needed, rather than it being a 25%, I think Barclays went from 25% to 30 or 35% deposit. And so if values haven't dropped and lending parameters have worsened, that's not so good for associates. However, what we are seeing is if you're in the right place at the right time, there are some practitioners, practice owners who are just totally and utterly bloody fed up and want out. So there have been situations where associates have been able to capitalize, well, not just associates, buyers, second-time buyers, whatever, have been able to capitalize on the disenchantment of existing practice owners. So that's my sort of overall take on the practice sales market. Now then, there will be some people that are involved in here who I'm extremely jealous of. Those of you who have the sort of practices that are worth millions of pounds. My firm actually started dipping its toe in the water in competing with some of the sales agents, with the Christie's, the MediEstates of this world. We started that about a couple of years ago. So, and we're very, very selective in the sort of practices that we help. Those practices that will inevitably only sell to a corporate are sold on a multiple of EBITDA. And who better to help legitimately massage the EBITDA in the right direction, but a firm of dental accountants with really good corporate finance expertise. So we know about this because we're actually at those sort of practices, we're helping them sell. Now then, what we've noticed here is that right at the very top end, you had at one time Bupa were buying practices, and they were very keen to look at EBITDAs being, you know, tickled upwards I have to say in a totally legitimate way. I'm not talking about anything underhand here, but just, you know, for example, you might have had an associate on maternity leave. So your last set of accounts, the profit was depressed. The associate was on maternity leave. She's not on maternity leave now. So there's a legitimate tweak to the profit. So things like that is what I mean. But also, once you've got the EBITDA, the multiple, 5, 6, if we go back in time, I remember when it was much lower, 5, 6, 7. Well, there were situations where it was going for 10. So you have a higher EBITDA, much higher multiple. You're into bonanza land. Those deals are much harder to secure because the investors, the private equity funds that are backing the big corporates, have reined back again a bit with what's happening with, you know, the worldwide situation. So you might be disappointed that you're only going to get 5 million instead of 5.5 million. So at the real top end, there has been a bit of an impact.
Fair enough, but I guess we're not all at the top end. You know, well, maybe we are. I don't know. I'm not, well, we're obviously at top end of dentistry, but are we, you know, multiple practice owners? Would you say that if you were looking to sell a practice, so that the process starts a couple of years in advance to kind of make sure that everything is, you know, everything's in order, and that you're, you know, all your soldiers are lined up, and therefore your due diligence, etc., would be less likely to bring that value down at a later date?
Yeah, that's a good point. A couple of years is probably about right, but the other thing that can catch some people, although the publicity about it is fairly widespread now, so it probably won't affect any owners that are watching this, but there is an expectation if you're selling to a corporate that you will stay on for 4 years or so, and actually that's another factor, that when you've got somebody that understands the market for the right sort of practices, you can get that period negotiated down. However, so you've got the 2-year preparation period. This isn't sort of something that is written in a tablet of stone, and in fact there are some situations for those of you who are selling to corporates that it can be a much shorter period of time. But if you think about it, if you are have the sort of practice that's selling on a multiple of EBITDA, and that probably requires some explanation as well, because the corporates and the sort of people that really are only interested in EBITDA tend to only be interested in buying practices that are above about $750,000 of gross fee income. So if you've got a practice that turns over 400, 500,000, although EBITDA is sort of relevant, it's not going to be sold to a corporate, and there's a different mechanism for evaluating the value. If you've got the sort of practice that's going to a corporate, it's going to be sold on EBITDA, and therefore if you, in some instances, it might actually be more than 2 years. What you want to do is to have a plan to grow that EBITDA in a sustainable way. One-off, flash in the pan of doing something, I can't really think of what this might be. You have some huge Invisalign promotion that you're giving this stuff away, but it boosts your profit a little bit, but in a crazy way. That's not what I'm talking about here. It's sustainable growth that is evidenced. It's going to keep going even when you're not hands on the tiller of running the practice. So you want to get that profit to a level where which you've got. You might be able to keep it going a bit more, but you've had all the easy wins to get that profit level, and that's the time that you want to sell. And then of course the actual legal process, I think they were talking about the average length of time for selling a practice is something like 9 months. And that's probably shunted out a bit during COVID, because things like, I gather, the CQC are taking 5 months to look at stuff where it was only 3 months beforehand. So there are complications with selling a dental business.
Okay, fantastic. Thank you. I guess we want to kind of move on from selling practices, because there's obviously lots of different people on this call. I'll ask a couple more questions and then maybe throw it open to the group. So completely changing tack now. What's the best piece of advice that you would give a new graduate?
Well, that's a tricky one, because it's a long time since I was a graduate. But I think based on my experience, I suppose the best way for me to approach this is to look at my successful and happy clients and sort of try and get a sort of a distillation of, who are they? What are they doing? And so wouldn't it be good, young graduate, all things being equal, for you to aim for that? Now, I know, and what I was saying before about my son and my daughter-in-law, that there are some people that, for whatever sum of money, they don't want to get involved in entrepreneurial hassle. So clearly, happiness isn't just about money. But for a graduate that wants to be successful in this conventional dental sense, then I think that the way forward has got to be, and I'm not just saying this because I'm talking to a group of cosmetic dentists, you've got to specialize, you've got to harness talent, you've got to preferably do something different. And if you're doing something different and I'll use perhaps the dirty word in a healthcare environment, your customers like what you are doing, then that will lead to your success. And I've seen some amazing businesses of very, very profitable, doing stuff that dentists enjoy doing, where the owners are happy. It's a win-win. Well, it's a win-win-win. They're happy, they're making good money each year, and they're creating something of tremendous value. I'm talking to two guys at the moment. I don't know how old they are, but they're under 50, and I'd be disappointed if they're not going to be selling their two-site practice for between £5 and £10 million. Wow. So that I wish I was them from that financial perspective. So yes, that's what you can do, but it's not easy, and you've got to have the vision. I thought about this going back in time, that at one time when there was when I first came into looking after dentists, goodwill values were 1/3 of gross revenues, and it didn't matter what sort of practice you had and where it was, inside the M25, in the Outer Hebrides. That was the rule of thumb. But things have changed, and now entrepreneurial skills are relevant in dentistry. And what I think is the next phase of that is that there will be people going bust. We haven't touched on NHS Q4 yet, but I've made myself very unpopular with NHS England and the CDO's office by saying some people are going to go bust, and have that on your conscience with your Q4 arrangements. So there will be people going bust, but there'll be people making millions of pounds. It's no longer this sort of narrow band from the best to the worst. We've got this sort of infinite spectrum. And in the real world out there, I only act for dentists now, but over the years I've had second-hand car traders. I actually had, when I first started, somebody who picked coal off the beach in Sunderland. Imagine that. Taking him to the bank to get a loan. But I don't do that now. So yes, the people go bust in the real world, and they don't go bust in dentistry, well, other than Finest Dental, of course, but there were sort of issues there. So, but more and more, that's going to be the case, that there's risk and there's a reward. I got off the question there, Carol, sorry.
That's okay. No, this is great, Alan, loving it. So just before I move on, because I've got other questions people have submitted, but I'd like people who are on the call, because they obviously are interested. Would anyone like to unmute themselves? Everyone's like, or actually put your camera on and then unmute yourselves. Does anyone have a question for Alan that they'd love to have answered? Because this is a great opportunity. Anyone?
Stunned into silence.
Yeah, no, Sham, go for it.
Hi, Alan. How are you? Thanks for doing this. This is great.
Oh,
Well,
you're welcome. You haven't got a sister who's a dental solicitor, have you?
no, I haven't. Is there a pop-out solicitor?
There is, yes. And I've got a client called Ricky Popat as well, who is the cousin of a dentist. But sorry, we digress.
No, it's fine actually. I do know 2 other dentists, and my brother's a dentist as well. He's an orthodontist. The question I wanted to ask actually is about IR35. I have actually, I did speak to you briefly last year, and you very kindly advised me on a few things. So I really appreciated that. I have sold my practice now. So I'm an associate now, but I've just got an email from the corporate about the IR35 and the fact that they want from April to pay into personal accounts and not our limited accounts. Right.
It's not Colosseum, is it?
It is, yes.
Oh.
It is. So yeah.
There's an amazing coincidence because, you know, when I was saying in my introduction about the specialists that it helps to have, UNW has got 2 very high-level employment taxes specialists. I know one of the, I could waffle on with interesting anecdotes, but I know one of the senior older dentist. I may even be on the board. A guy called Harry Stafford. I don't know whether you've come across him. So I know him. I was having a chat to him at the weekend. He introduced me to the CEO of Colosseum, and we've been giving them some assistance with their IR35 procedures. The letter that you've received, I got to be very careful and diplomatic here, but shall we say it could do with another pair of eyes and hands. So. Yeah. So don't worry about it, because I think that I mean I'm happy if it's sort of helpful to give a brief explanation of what IR35 means in the dental world.
That would be great. Yeah.
There has been a significant change in that at the core of all of this, and in effect, nothing has changed. It's important that people who are carrying out a self-employed role or have their own limited company, which is utilizing them to carry out what is in effect a self-employed role. It's very important. It always has been important that those individuals are correctly classified as being self-employed. I'll come back to that. So in other words, as a dental associate, never mind the fact that you've got a company, is the work that you are carrying out as a dental associate in the way that you are carrying it out, not just the fact that you're a dental associate, but the way that you operate and the contract that you have, does that correctly tick the box for self-employment? That is what's paramount. All that's changed is the responsibility for evaluating that has moved from you to the corporate. So all of a sudden it's relevant to them. They get a kick in the whatsits if that interpretation is incorrect, which is why they've all sat up and thought, we better do something about this, we better send you a letter. Now the situation, if we then, so that's what started this ball rolling. The evaluation is now on the corporate side as opposed to your side, which is why they're more interested. But let's come back to the key question. Everybody here who is working on a self-employed basis, is that correct? And the answer to that currently sits with 2 important tests. The HMRC have manuals, their internal manuals, and if somebody comes along and says to an HMRC person, whether it's a tax inspector or anybody else, here we are, here's this dental associate, should we be treating him as self-employed? Then there are 2 tests. Number 1, is that dentist working to a suitable contract? And the main suitable contract is the BDA contract, which ticks that box. Now, clearly, most corporates aren't using a BDA contract, but they're using something which is the equivalent of a BDA contract. So if you've got your contract, appropriate contract, if you have one of those and it's signed tick in the first box. The second box, and don't laugh here because this is actually the way that it works. Are you working in line with that contract? Because you could have a contract that says this is what it's agreed that you do, but you're doing something totally different. And so it's very important. Are you working in line with that contract? Now, if you can tick both of those boxes, you're self-employed for tax purposes. End of. Now, what has been happening, and some of you might have been caught up in this, particularly if you've been working for My Dentist, HMRC, for about 2 years ago, possibly time flies now, maybe a little bit longer, started off a review. And they were inviting dentists. It wasn't compulsory. Would you like to come and have a chat for this, next Tuesday afternoon? Come and have a chat with us, and we're going to ask you about, the way that you work. So they were basically trying to fact find and find out what was really going on. They asked mainly My Dentist, self-employed dentists, because they must have had a thought that somehow or other, the way that My Dentist were asking their associates to work for them, somehow or other caused problems. But to be fair to My Dentist, it's a sort of a general corporate type of issue. So they went through all of that process. They were just about to report. And we had through NASDAL, we had an informal line into them. And what we understand was going to happen, but COVID came along and all of a sudden, they were too busy getting involved with furloughing and all the rest of it. They haven't concluded their review. But we think what will happen when that review is concluded, that they will be moving away from the historical, have you got the contract, are you working in line with it, to operation of something called the CEST test, initials CEST, and it stands for Check Employment Status for Tax. And that is something which is in general use. It's not dental specific, it's relevant to Uber drivers and anybody else. Now, for a bit of fun, go and Google CEST test, answer the questions honestly, and then go and jump off the Tyne Bridge because it'll tell you you're probably not self-employed. No, that's tongue-in-cheek. That most dentists, I'm told, when you do that CEST test, it will say that you are correctly self-employed. However, and that's the NASDAL accountant's view, that the vast majority of dental associates will remain self-employed. However, some will not, and it all depends on the way that the contractual arrangement and the operating procedures. I don't mean clinical procedures here. Well, a key one is something called substitution. Now, you just sort of cast your mind. Principals do this, associates do this. Let's just have this hypothetical situation. So you are an associate, and for whatever reason, you don't want to go into work today. So you think, I don't want to go into work today, but that's going to let the practice down. So I'll send my mate along, who clearly this mate has to be a dentist. So if you have the absolute right to do that, then you have the substitution box ticked. If you're not able to do that, then you can't tick that box. And for those of you who are practice owners, just think about this, because you're on this kind of contractual end of this. So you've got, Sham, who's supposed to be coming along to work as an associate, but Sham doesn't come along. Pippa, who's another box that I'm looking at here, Pippa comes along instead. Are you going to say, oh, hi, Pippa, no problem. Yeah, there's the surgery, off you go. Or are you going to say, hang on, what's going on here? And therein lies the potential problem with the CEST test. Now, that's not the only test. There are lots of other questions which you can enjoy answering later on. But the view here is that probably it will not bring an end to self-employment for dentists. And that is incredibly important, because what is this all about? It's not about just the ability to claim tax relief on things a bit more easily, to get tax relief a bit on your motor expenses or whatever, which as an employee you wouldn't be able to get. It's all about national insurance contributions, because between the employer, the practice, and the employee, which would become you, the associate now, but you'd be the employee, there's the best part of 30%, possibly even more, national insurance contributions. Who's going to pay that? Because that's come from nowhere. Now, and this is, again, I sort of refer to myself sometimes as being like the Don Quixote of dental financial affairs. I have my campaigns, whether it's with NHS England, NHS pensions, the BDA, I don't care. I'm out there to sort people out. I'm invariably not successful, of course, but here's another campaign coming, because who's going to suffer? And it'll be a geographical thing here, is my prediction, that in those areas where it's difficult to get associates, it'll be a huge impact on the profitability of the practice, because you can't say to the associate, oh, I'm sorry, here's this 30% NIC cost. So instead of you being on, it works out about £70,000 a year, you're going to have to go down to 45,000 a year. Is that all right? Under pay as you earn? Well, just imagine that. But in some other parts of the country, it won't be like that. I've wandered off the point here for IR35, but there we are. That's an IR35 plus explanation.
No, that's good. That's really helpful. So, but yeah, I may have to contact you for some more advice on that, because it looks like it's going to be a bit.
I think the long and the short of it is that I think that unless you are carrying out your dental associate duties in a very unusual way, you'll tick the self-employed box, which will then mean that Colosseum or anybody else won't have a problem paying your limited company. So that's the way that it should.
To be fair, the contract I have specifically has that I'm responsible for locums, which was one of the things that they're looking for. So if any reason I'm not well or I need to put a locum in, it's my responsibility actually to do it, which is obviously ticking the box.
Well, and actually that's a very good point, Sham, because that was one of the things that I don't think that the HMRC review team picked up on, because I was aware of that. But I think there's a very big difference between what's in a contract and what actually happens. Because I'll come back to, well, you might want to answer this. It might be in your contract, but typically what happens is there is a cooperation between the practice owner and the associate. If you were to say, I'm not in tomorrow, but along comes Pippa, and not agree that with your practice owner, and for your practice owner to be happy with Pippa and have the right to say, I'm sorry to pick on you, Pippa, but have the right to say, sorry, I don't want Pippa to come along, we'll have to think of somebody else. So it's down to the legalities and the practicalities. All of these things are relevant.
Excellent. Thanks for that.
You're welcome.
Well, that was an excellent answer, because I know that is a big concern about there's a lot of talk, isn't there, about, should associates be self-employed? Should they be employed? Do they fulfill the contractual obligations? And I think what you're saying there, Alan, is make sure the contract is correct, get the contract right, and then fulfill the contract, which is key. And therefore understanding that why a contract is written the way it's written is to protect both parties between self-employment or employment.
Yes, and do the CES test. That's very important, because it could be that after doing the test, because it gets very interesting, because this whole debate also applies to hygienists and therapists, where it's a lot more difficult. But I did some presentation to trainee therapists, going along to that, thinking there is no way, I'm going to be embarrassed here, I'm going to have to tell them all PAYE is the appropriate mechanism, and they're all going to be really unhappy. We went through live on screen the answers to the CES test, and it came out that it is entirely reasonable for them to be regarded as being self-employed, assuming that the substitution was a key point, but there are other ones as well. So I'd encourage you to have a look at that.
Yeah, it sounds very good. Thank you. So is there anyone else on the call who would like to ask a question, having now thought about a few options?
I do have a couple more, but I'll let someone else ask some first, and then I'll come back.
Anyone else? Go Sham. I think.
Actually, Carol, I was going to ask, but you kind of covered it on the hygienist point there. So are you saying then that really with hygienist therapists now, they should be on employment contracts?
I would Chris, I would refer you to the CEST test. I think that's the CEST test isn't perfect. Tax practitioners think that it's sort of biased against the taxpayer and slightly in favour of HMRC. But that's, if you can pass this, if your hygienist or therapist can pass the CEST test, then I think, and make sure that you keep a record of all of this, so that you've got something to refer back to, then you should be okay. but in my time, I think there's been quite a drift from self-employment of hygienists and therapists towards employment. And there are some situations, actually, that going back a few years now, the BDA actually carried out a survey of associates, which at the time, it was John Milne, who's now with the CQC. I remember saying to him, this is really dangerous, John, because he was asking associates, would you rather be employed or self-employed, almost implying that there was a choice. And there's not a choice. The facts dictate which status you have. But he asked the question or the BDA asked the question anyway. And it was the majority were in favor of self-employment, but not a huge majority, because there are some people who would prefer to be employed. You know, you get holiday pay, you get better redundancy rights, and all of this sort of stuff. So it's not that there are some people. There might be people watching this who think I'd rather be an employee. So we've always got to bear that in mind. But it is important. It is not a choice. It's down to you know, the facts dictate the status.
Okay, thanks.
I have to admit, when I was a principal and I did my contracts with my associates and my hygienists and therapists, we actually, I mean, between them, they wanted the locum clause taken out, because I used the I-compliant BDA contracts. And they said, yeah, we don't want to be responsible for the locums. And I said, oh, fair enough. I don't want you to put in any random people in there anyway. I'd rather have a good say on who works. But that may just now work against.
Yeah, well, absolutely. There's a classic case. You know, if you had your practice and you'd taken that out, you'd be potentially sitting on a ticking time bomb. Although I must say that what is quite bizarre in a way that you know, given that I've been looking after dentists for the best part of 40 years, HMRC, other than this special review that they're carrying out or just about to conclude, they've never really pushed on with associates. You know, it's not something that they've been particularly interested in pushing and in interrogating. They've just sort of left it as a community. They get on with it. Because I mean, the other point with this is let's assume the worst case scenario that associates are correctly regarded as being employed with this extra national insurance contribution. Think of NHS practices. Who's going to pay it? Yeah, I was sort of joking about this again, probably with my friends in the BDA. You know, I'm damn sure that NHS England aren't going to say, oh yes, there's a 30% increase in associate costs here through national insurance contributions. Let's just boost everybody's UDA rates up to cope with that. Do you think that's going to happen? Because I don't. Actually, would it be helpful if there's no, if there's other questions, great, but if there isn't, I think it'd be quite useful for me to give you a news from the front about associate Q4 NHS pay. Is that something?
I think that would be absolutely brilliant, Alan. There is one other question that has come up on the chat, but you crack on, and then we can look at the question from Stuart. Okay.
Well, for those of you with NHS contracts, hopefully you'll be fine at hitting the 45% of normal UDA's threshold. And you can see here that here's my little bulletin board about what I think about it, the cliff edge. I think it's absolutely bloody appalling. However, for those of you who I'm going to work on the presumption that you are all in 45% plus territory. Now, in that situation, there is a potential problem that arises in relation to associate pay. Because, and this came about because following a webinar that I was on last week, somebody asked me for a bit of help, and they had 3 or 4 associates, all of whom were doing, it was sort of between 50 and 60% of normal UDAs. And so the question was, how do we pay them? And they showed me the way that the BDA guidance had worked. And that's why I've been in touch with the BDA, because I think that whilst their guidance wasn't wrong, it was misleading. And so the problem here, and this is where it's a two-edged sword, obviously, because there's practice owners and if there are associates on here. If you're an associate that does 60%, and I think okay, I'm an accountant, but I think my understanding is that what most practices have done with regard to NHS, they've got the team together and said, look, we're all in this together. We don't want to fall off the bloody cliff edge. So let's just sort of, work together and make sure that we get 45%. And if we get 45%, then everybody will be paid, to use the immortal phrasing of the CDO, at the previous level. But in other words, be on full expected pay. But what do you do if everybody exceeds the 45%? Because the associates will be saying, well, hang on a second, the formula is 2.2 or 2.22, if you want to be mega correct, times UDA. So if I'm doing 60%, I want to be paid more than the person that's done 50%. And there's an intuitive logic in that. But where's the money going to come from? Because once you get to 45%, and if everybody in the team is doing more than 45%, the practice isn't getting paid for that excess. Well, other than there's a 2% sort of carry on, but broadly speaking, the practice is not getting paid. So what my presumption is that the clock stops at 45%. Everybody in the team gets paid at the previous level, i.e. in full, as if they'd done 100% of expected UDAs, and that's it. But I don't know, there might be people on the chat box saying, to hell with that, Alan, I want to get more if I'm doing 60%. But the point here is that if everybody's doing more than 45%, where's the money going to come from? Because the practice isn't going to be paid that. Even if you
Alan, so could I just ask, is that 45% just for this quarter, or is that 45% for the year? Because there's quite a bit of confusion in that.
Ah, right. Well, that's an interesting question, Chris, because there shouldn't be confusion. It's for the avoidance of doubt, unless you've got an NHS practice that hasn't hit the 20% funny level of activity that wasn't, that include telephone triage and all the rest of it, the non-UDA level. And apparently the BDA have told me there was something like 250 practices that didn't hit that target. But most practices did. If you, as long as you hit that 20% target, then you have received, barring abatement, and let's not get into that, but you will have received for 9 months 100% of your NHS contract for that 9 months. And I know it gets difficult chucking percentages about because that 9/12 of the full year is 75%. But I'll use sort of layman's terminology. You will have been paid in full for those 9 months. And okay, there is an abatement adjustment, but interestingly, you might take this on board. NASDAL fully supports the NHS England calculation of abatement. There isn't some sort of fiddle going on there. You haven't been shortchanged. It's almost exactly in line with fairness in terms of the saving that you would make when the practice is either shut or operating well, for the period of time that you were shut. It's fair. So coming back to the thread here, you've been paid in full for the 9 months. The 45% is of the level of activity in the final quarter. So actually, if you're doing numbers of UDAs, it's 45% of 3 months worth. So it's 45% of 25%. I'm probably blowing people's minds here with percentages. But basically, for the last 3 months, you've got to do 45% of the level of activity that you would have done had there not been COVID. But in the previous 9 months, forget that. You're not going to be penalised going backwards unless you've managed to not complete the 20% funny activity level. So sorry, I've answered the question now, haven't I? That's where we were. Is that okay, Chris?
Yeah, that's great. Yeah, that's great.
Okay, so forgive me, in my enthusiasm, I've lost my thread here, but I think what I was saying, yes. So if you're happy, or in the case of associates, unhappy, my logic here is that if everybody hits 45%, everybody's going to get paid in full. That means you get paid the same whether you've done 60% or 55%, because we're part of a team to get the whole practice past the 45% level. There's a totally different calculation that occurs if you've got some people, if the practice doesn't hit 45%, that you're into a totally different calculation. But I think for simplicity's sake, I wanted to highlight what I think is going to be the most common situation, because you can't, I mean, I'm not part of a dental team, But I think you cannot have a situation where your team of associates and principal that are trying to hit this 45% level can have everybody hitting exactly 45%, because otherwise you'd have some people going home after 3 weeks, and it just wouldn't work. So I think there has to be sort of magnanimity of spirit in that we're all in this together to get us over the 45% level, and in return we're all going to be paid in full. And if somebody does a bit more, I'm sorry, but that you know, maybe sort of back off a bit next month. But the danger is you slip off the cliff. Now, but with that in mind, the calculation of lab bills, the appropriate lab bill adjustment, becomes quite complicated. Now, if you want a worked example, please ask me for one. I'll send you one, because it'd be better than me trying to explain it over a video link.
Wow. Wow. I mean, there's a part of me that says, thank God I'm not NHS, because I take my hat off to anyone who's working within the NHS system or has got any, and there are a lot of people who are. There are a couple more questions, Alan, and I'm aware we've taken up like 45 minutes of your time, and we're hoping to finish in the 60 minutes. So there's a question from Stuart that says, what's the threshold point for limited companies, for a limited company to become beneficial? It's an exhausting topic, because to be absolutely honest with you, I think when I became a limited company, I literally snuck in under the radar. No, I didn't. I just snuck in there before everything changed, which was a few years back. But is it as beneficial now to be a limited company or not? I mean, what's your thoughts?
It's another really good question, so thank you to the person that's put the question in. But unfortunately, there isn't a sort of a the answer to your question is £50,000 or whatever. It very much depends on circumstances, and almost unbelievably, maybe for some people it can actually be worse, because last tax year was the first tax year when there was an extra slice of income tax brought in on dividends. Those of you who've got companies will have been irritated by that. An extra 7.5% income tax that came in on dividends. Before that extra 7.5%, there was at worst neutrality of taxation between companies and self-employment. But now you can actually be worse off. And the sort of situations where you will be worse off is if you have a limited company, you make the profit, and the level of profit doesn't really is actually irrelevant if you take it all out. So let's say that you have a company that makes £300,000 profit, and you take it all out by way of dividends. You will be worse off tax-wise than an associate that, actually I'm saying associate, principal, doesn't matter, a dentist that is self-employed, sole trader, partnership, that makes £300,000 and has it taxed on self-employed tax because of this 7.5%. And this is why it's impossible to give a profit figure, because there are two main areas where limited companies really pay dividends. So the answer to your question is yes, Carol, it can still be very worthwhile. Number one is when you're borrowing money and repaying money. So typically, and this is of interest to those who are going to become practice owners, you borrow the £500,000 from whoever it might be, Lloyds, Barclays, Wesleyan, whoever, and if you can repay the money by using a limited company, then the approximate saving over the life of the loan is the difference between 40% top, well, it's not the top rate of tax, but most dentists will max out at 40% tax. The lucky ones are paying 45% tax, but let's say 40% income tax and 20% company tax approximately. So the difference between the two is 20%. You will save over the years on repaying that debt £100,000 worth of tax. It works out to be the difference in the two tax rates multiplied by the loan borrowing. And in this example, I've used £500,000. So there's £100,000 tax saving paying back through a company as opposed to on a self-employed basis. So that's reason number one. And actually, that I'll come back to reason number two in a minute. But this is another one of my campaigns, my Don Quixote campaigns with NHS England. Why won't you allow people to incorporate NHS contracts? Now, I could give you the official reason for that, but typically they won't. They will put obstacles in the way. They will create barriers to the point where it's not worthwhile or impossible to do it. It's very frustrating, because you imagine you've just bought your NHS practice. Alan, I want to use a limited company because I want to save that £100,000 you were talking about. Sorry, you can't. NHS England won't let you. So, but number one is servicing of debt. So number two, and I hope I've got lots of listeners in this situation here, cosmetic dentists making good profits, where your profit level significantly exceeds the amount of money that you want to take out of the practice. So each year the practice is making £300,000 and you're only taking out £100,000 a year. So you've got £200,000 of surplus profit that is usually turned into cash. The tax saving on that £200,000 is the difference between, well, in this case, it'll be 45%, most of it, but never mind, I'll simplify it, the difference between 40% and 20%. So that's the 20% saving on 200, you're saving £40,000 a year. And it's accumulating then within the limited company. So, and that's when I get other clients or potential clients saying to me, I've got, and don't be jealous, some of you here, but this is what happens with some people. I've got my successful dental practice. It's incorporated. I've got all this bloody money in the company bank account. I've got £500,000, Alan, and I can't take it out because if I take it out, the tax that on taking it out by way of dividends is punitive. So come on, what am I going to do? Now there are interesting structures where you can create a group, you can have a property company, all the rest of it, or an investment company. That there are things that you can do, but so those are the two main reasons. One is where you are repaying debt. The other is where you've got lots of surplus cash. There can be other sort of minor reasons. If you're an associate and you're doing just private work and you have let's say a spouse who isn't working at all, perhaps on maternity leave, then you can, and let's say you're earning £100,000 a year as an associate, you can legitimately split that tax, 50,000 for you, 50,000 for your spouse who becomes a shareholder in the company. So there are sort of, stuff like that you can do at the associate level. But of course, you're probably all aware, those of you who this is relevant to, but if you're an associate and you are doing NHS work, if you incorporate and put your NHS work through the company, then you are excluded from the NHS pension scheme, which is an incredibly bad idea.
Is anyone yet getting the idea that they need a specialist dental accountant? Because this is obviously huge. I mean, there's so much, isn't there? There are a few more questions that have come through on the chat. I don't know, Chris, do you want to ask your own question? Okay.
I think he said he was driving somewhere, so he may have dropped out.
Is this, I can read it in the chat box. This is the one about the lockdown, the self-employed dentists earning more. Yeah, I think, well, this is really, really frustrating. There are a small number of people during COVID who've been let down by Rishi Sunak. And those earning more than 50,000 who are self-employed fall into that category. Universal credit is the answer to that, but that's, you're not going to get excited about that, Chris. There isn't anything. There's nothing. There's diddly squat, and the same thing can apply. It might affect some people that are involved here. It comes back to the old limited company idea. Where, pardon me, that you could have somebody that was operating through a limited company. Usually what happens is that there's a very small salary paid, let's say sort of, the magic number is about £8,000 a year salary, and the rest of the reward is taken out by way of dividends. You can have, successful people, £90,000 a year a dividend, 10,000 salary. Wallop, COVID comes along. What support's available there? Again, answer, well, I was going to say you can furlough yourself, but then that's based on the £10,000, but you're not getting support proportionate to your £100,000 normal level of remuneration. And I guess, whereas the self-employed people who can get no support because they're earning more than 50,000. That is, you know, not a, there's no sort of moral case to say, well, serves you right. Whereas there is a moral case, not my morals, but there is a sort of an external third party morality to say, well, it serves yourself right. You've got a limited company. You've been trying to save national insurance by taking dividends. So, you know, what goes around comes around. Yeah, but don't shoot me.
No, you're right. I mean, unfortunately, that is life. What comes around goes round. Can't win every time. So a couple of other questions here. I'm aware that we're, you know, coming up to the hour, and I don't want to take more of your time. So there's a question here from Aaron that says, are you better paying yourself higher income than dividends?
Yeah,
I think he means in a limited company.
and the answer to that is no, because you end up shooting yourself in even more in the foot. That by paying yourself a salary, then the dreaded national insurance comes into play. So you're worse off with a salary than dividends, unfortunately. Actually, it links the partial potential mitigation in relation to this question links into the next one, which is by, how do you pronounce that? Fershta. Is it possible to have a private part of the practice as a limited company? So yes, this is possibly a way around this earlier question. You can, in some situations, split your business where you've got an NHS practice, which is a sole trade or a partnership, self-employed anyway, and you've got the private practice as a limited company. And in doing that, there are a number of people who have that structure. And it was originally set up because of what I was saying before about NHS England, who won't allow the NHS part to incorporate. But bizarrely, it's become advantageous following this 7.5% extra. Technically, it's called the abolition of dividend tax credit, is what it's about. But to the layman, it's a 7.5% extra on dividends. So because those people who've had to keep the NHS in a sole trade and have a limited company private, if you can possibly, the magic trick would be if you can legitimately, very important, legitimately get the situation where your self-employed earnings after tax are exactly the amount that you need to live off, then bingo, you've got the optimum situation, which is a combination of these two things here. You've got some self-employed income and you've got some profits in a limited company where you get the choice. You either have it only taxed at 20%, or if you want to take some of it out to live off, out it pops, and you've got this more onerous rate of tax because you've got the 7.5%. But the bulk of your earnings have come from your self-employment, your NHS self-employment. I suppose you could, if you had two practices, two private practices, you might have one that's self-employed and the other that's a limited company, and then you've achieved the same thing. But that is very unusual. It's more usual to have the NHS as a unincorporated.
Fantastic. I'm conscious, you know, we're using up your time. I will just.
Don't worry. I don't mind overrunning a few minutes if it's.
I would just. I do have a question myself, but I would just like to ask: is there anyone else on the call who would like to ask Alan a question? Because clearly you have opportunity here to a wealth of knowledge.
I have a quick one if no one else has.
Go.
Alan, you know, Rishi had promised the business retention payment of £1,000 when you kept your team, and it was supposed to come at the end of January. And now, obviously, with the extended furlough, that sort of has disappeared a little bit. Is that totally disappeared, or is it going to come back?
No, it's totally disappeared. There has been some talk about whether it should be brought back or not, but as we sit now, it's disappeared.
Yeah, I sort of promised my team that I would give it all to them, and now I'm got a bit of egg on my face at the moment.
Oh no! Well, blame. Well, I would need to see your profit and loss account, Sham, to be able to. You know, I might be saying to you, oh, "Come on, mate, give them £1,000 each. You can afford it." On the other hand, I might not.
No, I've already given them some, but I thought I'll give them this as an extra as well.
Yeah.
I think we try and do the right thing, and it's so bloody hard when the goalposts change.
Correct.
It is bloody hard. So I have a question. I just like, if you can answer this very quickly. I want to buy an electric car. My children want me to buy a Tesla. Is there any way, I have a limited company, is there any way as a dentist that I can have a benefit, tax benefit in buying that?
You certainly can. And in fact, I give myself a slap here because as your accountant, I should have acquainted you to that. But it's something that we're working on at the moment. It sort of came out of left field, really, that although I'm really into cars, I'm into cars that have an average age of 50 years plus as opposed to electric ones. But yeah, no, there is a really good opportunity here, Carol, in that one of the problems with limited companies and the provision of cars is, you touched on the words taxable benefit. And if you ignore electric cars or cars like, you know, what are they called, Renault Clios and what have you, ones with very small engines. So the sort of cars that most dentists want to drive, BMWs, Mercedes, you know, 2-3 liters, etc., have such punitive taxable benefits for the user of the car. That's why hardly any dental limited companies have company cars. So that's the starting point. Along come electric cars, the ball game changes because the taxable benefit on an electric car is very, very low. I think somebody asked me this question a couple of weeks ago, who actually he's a cosmetic dentist, he's probably not on here. You know, he's saying, all of my mates, shows the company that he moves in, all of my mates are buying electric Porsches for £90,000, Alan, you know, what if I do that? Yeah, so and Tesla, same sort of thing. What happens there is that the tax that you pay personally is about £400 a year. It's a very low amount. The company, meanwhile, gets full tax relief on buying the car and operating it. So that if you compare that to what would happen if you were buying it in your own name, that's great. You're getting a 20% discount on that. It gets even better, but in a way that slightly worries me, with knowing what some of my dentist clients are like, i.e. they don't save to pay tax. But when you buy your 90,000, I wasn't talking about you here, of course, Carol, but when you buy your £90,000 Tesla or Porsche, you get an immediate £18,000 tax relief. It's tax relief straight away the year you buy it. So that's marvelous, because you've knocked 18 grand off your tax bill and it's costing you buttons to run the car. Why doesn't everybody do it? Now, there is a bit of a sting in the tail, because after however 3, 4, 5 years, when you sell your Tesla and you get £50,000 for it or whatever, I'm not sure what the residual values are, then it all unravels, because it's in the year that you say it sells for 50,000, you will get an extra tax bill of about £10,000 coming into play. So you need to look at, you know, effectively the loss in value of the car during the time that you have it. The company will get full tax relief on that, but importantly and unusually, the taxable benefit charge on you will be low. Now, but there is a difficulty here, that what I think is going to happen, and we've seen signs of this happening already, that the government's going to have no option. When everybody's driving electric cars, where they're going to get the money from, the taxable benefit charge will rise over time. But certainly, yeah, go for it. Go for the Tesla.
I'll talk to you about that in due course. So there's another question here now from Alan, who, I don't know, would you like to unmute yourself and maybe ask your own question? Or I can read it out.
Yeah, I can. I don't know if we can all read it here. Good. I can summarize that. It's a good question, because there's a specific here, but I can turn it into a general one. When you have an NHS contract and you die, then there is a danger of it being lost. So what some people do in that scenario is they get a friend who's a dentist to have their name on the contract in addition to them. Now, and this is what Anand has been asked to do. Now, that is actually something, it's not just a formality, you know, it really depends on how much of a mate it is. And a lot of this goes on, because the purpose of having your friend jointly on the contract with you is that if you die, then there is no problem in keeping the goodwill value, keeping the contract. There's no problem at all, because it is fully in the name. In this case, it would be in Anand's name, and you've got as long as you want to be able to sell it, harness the value for the estate of your mate. Now, this is where we need a lawyer on this. I don't know what happens if it's just in your name, but I think there is a severe danger that it's lost. You might be given a short period of grace. I don't really know, and that's not my bag. It's a legal issue. But let's assume that if you're not really careful, it's lost. That's why it's a good idea. But coming back to you, Anand, what you need to be aware of is that if you go ahead with this, let's say there's a clawback. Let's say that your mate can't afford to pay the clawback. Who's legally liable for it? It's you. So you need to be careful here as to choosing your mates, I suppose. But the principle behind it is a good, solid one.
Brilliant. Alan, would you like to come back with that? No, we're good. Oh, no, that's all good. Okay, well, Alan, thank you so much. I mean, brilliant advice. Excellent and eloquent, as ever.
And let's hope it was parts of it were accurate too.
Well, I'm sure. I'm sure. So, thank you. Brilliant.
You're very welcome. It's I think we're particularly during COVID, we're all in this together. If I can help people, then that I enjoy helping people. I'm not Mother Teresa, but it's good if I can help. Then I do. So.
Well, I do know your actual principle, which is if you can help, you will help, and you've done that for a lot of months now, and given people free advice. Maybe not forever, but but I've just popped your email address in the chat group to make sure that if anybody would like to kind of discuss this further, anything that they'd like to bring up, because you're clearly a brilliant wealth of information. But thank you very much for doing this for the BACD, thanks. That's all I can say.
No, you're all very welcome. It's good to meet you all virtually. And if anybody's got any wants to pick my brains, then you know where I am. I'm happy to do that. Okay. Thank you very much.
Thanks a lot, Alan. That was great.
Have a good evening.
Bye-bye. Bye.
Bye.